But I keep hearing the S word recently, and that's for stagflation, and that's what we're digging into on today's Stocks in Translation. First, let's get our terms straight. Stagflation here means three warning lights flashing at once: weak or negative growth, high unemployment, and high inflation. Stagnation plus inflation. And some folks draw a line between capital S, the 1970s kind of stagflation, and the lowercase s when only parts show up. And since the pandemic, we've really only seen the lowercase kind. So let's break down the three major components right now. Starting with economic growth, we have GDP, or gross domestic product. It's the home field scoreboard. It's what's made inside our borders, and gross national product, or GNP, tracks what Americans earn anywhere on the planet. You also have gross national income, GNI. It rolls up wages, profits, and taxes, less subsidies. And fun fact, economists often watch GNI when profits or labor income look out of step with GDP, like right now. Then there's inflation. You've probably heard of the Consumer Price Index, or CPI, which is a household shopping basket. There's also personal consumption expenditures, or PCE, which is a broader base instrument, and it adjusts for substitution, and that's why the Federal Reserve likes to use it. And we should also distinguish between so-called headline inflation from what's called core. Headline includes food and energy, while core strips these volatiles out to see the trend. And for jobs, we watch the unemployment rate and how many payrolls are added or subtracted each month, courtesy the Bureau of Labor Statistics. We also like to watch the weekly filers for unemployment claims, since it's higher frequency. If claims start climbing while payrolls fade, that's part of the stagflation case gathering clouds. Now, let's check the history. Here in this table, we can see that in 1975 and 1980, we had a capital S, unemployment north of 7 or 8%, double-digit inflation, and contracting output as GDP plummeted. We didn't really have anything close to that until the pandemic in 2020, but there is a key difference. In the early days of COVID, unemployment spiked and GDP fell off a cliff, as we remember, but prices didn't rise yet. Price inflation actually dropped to nearly zero in 2020, which is almost deflation. So it was stag without inflation. But by 2022, all the stimmies finally started jacking prices higher, north of 9%. The economy shrunk modestly, but joblessness stayed low. That's only 2 out of 3. And today, unemployment is modest, PCE is in the high 2s, and GDP is fairly strong. Definitely not 1970s territory. And we'd be remiss if we didn't point out some market stats. It can be tricky to trade stagflation, and as I just said, that's really not even the case today anyway, but one thing's for sure, precious metals are soaring. Gold is up 40+% this year, and silver is approaching 60%. Metals love elevated inflation when the Fed is cutting interest rates like right now. So here's what we want to watch for in the S checklist. On the data front, we're going to continue to watch jobs and CPI and PCE and GDP. We're especially keeping an eye on services inflation, as well as shelter, insurance, and healthcare costs. If these cool down, then core inflation cools as well. Then watch energy and the dollar. An oil pop or weaker dollar can reheat headline inflation pretty fast. And finally, this is a little tricky, but we want to monitor real incomes versus demand, which means workers' paychecks after inflation, and to make sure that they're growing faster than spending. Are people starting to dip into their savings and rack up their credit cards? That's a yellow flag. Bottom line, right now there is at least a chance of lowercase stagflation risk, but it's unlikely to get anything like what we saw in the 1970s or 80s based on what we're seeing right now. But if all three lights turn green, growth, jobs, and prices, well, guess what? That is your stagflation siren. And tune into more episodes of Stocks in Translation on the Yahoo Finance's website. We have new episodes dropping every Tuesday and Thursday.